This is a daily outlook into Thursday, June 18th. We can see that the previous day here was FOMC, and the market left a rejection block on both sides of the range, right? Overall, this profile was a range to expansion profile. We'll look at that on the lower time frames. But meanwhile, what's the daily chart telling us? Right, the daily chart is telling us that price comes from an expansion at 50% of a discount array, okay, represented by a weekly fair value gap. This weekly fair value gap, we have to remember, was located right at 25% of the 3-month look back, okay, so that's why this was an important PD array. Right, and so far inside of this week, Monday expanded, Tuesday reversed, right, and yesterday reaccumulated inside of the range, distributed lower, but then it started trading inside discount levels here, right? We're looking at discount levels such as a daily suspension block. In fact, you can see that the low of day comes in right at 50% of this level. We also have the range of the previous week's high, right, which is a rejection block here. This was the previous bearish dealing range that price was trading inside of, right? So if price will trade higher from here, the logic is that traders who were short at these levels, the market is currently giving them a fair chance to get out, right? Last chance to get out before the market would start doing this. And another thing, you can see that the market, right, this wick is important to me, okay, because by price leaving a discount rejection block from the previous day's range, this tells me that, right, not only has the order flow on the right side of the curve, it didn't switch, it didn't go from bullish order flow to bearish order flow, but overall you can see that this range here still hasn't been reclaimed, okay, the range of a premium SIBI inside of the range. An hour into the closure, price was trading at these levels and then closed back inside of the range. Okay, so I do believe that this rejection block here is pretty significant because of the fact that it was unable to reclaim a premium SIBI and because it's respecting mean threshold of the nearest discount array inside of the range, okay, represented by suspension block, new week opening gap. There's many levels to choose here. Fair BISI, right? This is why this is a suspension block, because you got a volume imbalance here, you got a volume imbalance in premium, and you got a fair value gap right through these volume imbalances. Okay, so I still do believe that this is an important discount array. Price is currently trading around these levels right now. If price for whatever reason will dip back inside these levels, whether it's for an open low high close profile or an open high low close profile, I do believe that these quadrants should be sensitive and offer trading opportunities on the lower time frames. Okay, so not much else to cover in my opinion on the daily. Very, very important level here. And if not in terms of premium targets, well, we're looking at daily highs and swing points overall, right? You got a low hanging fruit, the previous day's high, the weekly high, and then eventually all-time highs. If we look at the range of a 3-week look back, right, kind of the same idea, the market expanding into discount, revisiting the range of the new week opening gap, the previous week's high, and a reclaimed fair value gap right at 50% of the range, and is respecting this range. Right, the market has expanded into it, but it failed to find a bullish closure. Now, this doesn't mean that, it could mean that it's going to do this, but obviously price could do this, right, for all that matters. Okay, so very important to track how price trades out, right, since it's currently trading inside of this range. Very important to see if it starts leaving fair value gaps out of it, bullish order blocks inside of this range, or does price, right, simply consolidate back higher, revisits an order block, and then expands through it. But again, no matter if it's going to be open low high close or open high low close, whether you use the levels of the daily suspension block or a reclaimed fair value gap. This also has a new week opening gap. These levels should be sensitive. Okay, if price will trade lower from these levels, then we're looking at the range of a discount order block. If price will trade higher from here, then as a low-hanging fruit target, we're looking at 50% here of a premium order block, and it just so happens that right at 50% of it, there's also a fair value gap. Right, so 50% of this fair value gap can be a great low-hanging fruit target for in case of an open low high close profile today. On the 3-day look back, first of all, we can see the previous day's range here, right? So this is represented by a range to expansion profile. Price obviously on the 3-day look back comes from a classic buy to a New York reversal to a range to expansion. Right, then in this range to expansion, as we saw, expanded into discount levels and found a rejection here. Right, if you look at the closure here of this candle, the final hour, you can see that the 4 p.m. profile was classic buy. Right, price opened, creates an order block at the open and expands higher from there, right, and closes as a consolidation. And in fact, Asia is currently trading off these levels. Another thing we can look at is the formation of the previous day's profile based on the levels of interest left by what was in the range. And we see that the previous day's high forms at 25%. Okay, so the lower quadrant of a 4-hour premium SIBI, and low of day forms at the new week opening gap. Okay, this was this was overall the array located at 50% of the range from the previous day, right? As the discount array was the range of a bullish order block. So that's covered for yesterday's profile. Okay, so price comes from expansion to consolidation to expansion. Right, so because we're trading in discount on the 3-day look back, right, price is opening right near the low, and the fact that there's an inefficiency inside of the range, I do believe that the market will want to trade above these highs, especially the FOMC highs. And again, overall, I do think that the drawn liquidity will be the premium fair value gap inside of the range. But nonetheless, we can look at what's located inside of the previous day's look back. Sorry, inside of the previous day's range. We can grade this range. Okay, so at 75%, we have the FOMC highs. Right? The range is very high resistance at these levels. At 50% of the range, you can find a bearish order block. Right, this range comes in right at 50% of the range, and at 25% of the range, you have a SIBI. Right, and the SIBI is important because it cuts through a a rejection block here, right? But this is also a mitigation block because price traded lower, higher, lower, higher, lower, right? And then has inversed this range so far. Okay, so you can identify the SIBI here at 25% of the range. You can see that so far Asia has traded into it and is expanding higher from it, and now it's trading around the range of a bearish order block. It's trading at the lower quadrant of it and is finding a reaccumulation. Okay, so it will be very important to see how price I want to identify anything in premium, because I believe that if the market inverts 50% of this order block, then the drawn liquidity will be the highs, right? Overall, the highs here are clean, and so I don't believe that price would trade all the way up here to the FOMC highs and fail again, right? I do believe that if it's going to expand higher from here, then it's going to trade to the highs and overall target the inefficiency inside of the range. Okay, so I do believe that these are two important PD rays left by the previous day's range. Okay, so I do believe honestly that this could be the low of day here already, right? If price reaccumulates from these levels and then starts trading higher, you know, since the closure here of the previous day's profile found a reversal, as we saw, right, last hour of the day as a classic buy profile, again happening from key higher time frame discount arrays, as we saw, daily suspension block, reclaimed fair value gap. Okay, so very important to see how price will trade around these quadrants, but this is not enough to, this can be enough to identify the order flow in the moment, but I don't think that this is enough as to where to anticipate where the high or the low of day could form. Okay, no matter if it's going to be open low high close or open high low close. And so we have to see what's in premium, what's in discount. Well, in discount we have the range of, well, actually we need to look at the 4 hour, sorry. Right, in discount we have still the range here of a reclaimed fair value gap overall, right? This, a daily suspension block. Right, so we have a daily suspension block in discount. If the market will trade below the previous day's low, you would then want to see, okay, because we're still trading inside of a discount array, it's going to be important to see if the market simply wicks the previous day's low or if it displaces the previous day's low, if it even gets here, right? It doesn't have to, obviously. So in discount, we're looking at this level, and in premium, we're looking at that same inefficiency that we used yesterday, right? I do believe that if the market will trade higher today, very, very likely it trades at least into 50% of this premium inefficiency. Okay, so recap on the daily, the market comes from an expansion, right, to now what I'm assuming is to be a retracement, since price respected 50% of the discount array and is unable to reclaim a premium SIBI. So I do believe that from here the market should trade higher back to all-time highs. My bias will change if the market reclaims the SIBI, right, slash displaces or has a strong closure at least through 50% of the daily suspension block. Then I do believe that the market will want to revisit discount. But so far the market is not telling me that, and so I would prefer trading open low high close profiles. On the 4 hour chart we saw the previous day's range, right, how it formed around the 4 hour premium inefficiency and the range of a reclaimed BISI inside of 50% of the range, right? This level is important, cuts through the previous week's high, cuts through the new week opening gap, and so far the market is holding these levels. And on the 3-day look back, we saw that today price opens in discount of this range. Okay, so opens in discount, comes from discount also, right? Not only does it open from discount on a 3-day look back perspective, but overall, right, from a daily or a 4 hour perspective, price is not opening in premium, right? It's opening around discount arrays. Okay, so because of that, I do favor an open low high close profile. If that's going to be the case, a low hanging fruit target can be 50% of the premium efficiency. If price would end up failing, right, either inside of the previous day's range or above the previous day's high, okay, it could be price trades here and then fails, then we're looking, sorry, in terms of discount, we'd be looking at right, the fill of this daily suspension block. Well, yeah, I think that would be the realistic objective if for whatever reason today will be an open high low close profile. And on the previous day's range, we analyzed the range. We saw that the market in premium and at the high has left relative equal highs, right? The FOMC highs come in right at 75% of the previous range. We saw that at 50% of the range, price left a bearish order block. You can see so far the market is reaccumulating inside of these levels. And at 25% of the previous range, the market left a SIBI, so an inefficiency, through a mitigation block. Okay, and price at the close inverse this level, and so far the open of the day, right, has retraced inside of this level and has expanded away from it. Okay, so we can also just for confluence, we can put up some standard deviations from the range that we come from on the 3-day look back, and you can see that the market reached terminus of this range right here. This is the 3-day look back here. In fact, this aligned right with the BISI that we had identified and overall the new week opening gap. And so, you know, even if this won't be a reversal higher, because price has found a reaction right at levels where we assume that the market should, you know, either start consolidating or reverse or retrace, okay, represented by -3 to -4 standard deviations. Prices quote unquote oversold at these levels. Okay, so I do believe that because of that, price should seek to trade back inside 50% of this range. Okay, and if we look at okay, well, let's look at the 3-day look back while we're at it. Right, you can see that right at 50% of the range, that is where the market is in balance. Okay, and so obviously this is high resistance here. You can see that there's many order blocks created at these levels. There's the order block that creates the previous high. There's the accumulation of New York, and well, a bit below that, there's these two order blocks that form at 50% of the previous range. And you can see that above this range, right, we have a pocket in price. Now, we also have a pocket at the lows, but the difference is, right, that the market comes from expansion to consolidation to expansion to expansion. Right, so the fact that price didn't spend much time trading inside of this range tells me that this is likely the low of week. Even if it isn't, price should at least trade back into 50% or premium of the range before continuing lower. Okay. Right, then 75% of the 3-day look back, we have an inefficiency inside of the range. At 50%, we have a range of order blocks, and at 25%, we have the new week opening gap, right, that same fair value gap we were using yesterday, and some inefficiencies on the previous range, okay, which price has already inversed. Okay, so I'll simply put back these levels. Right, so we have a fair value gap at 25% of the previous range. We have an order block at 50% of the previous range. So these are levels that should help you from an intraday perspective to gauge order flow. If not, as to where the market could potentially create a high or a low of day. If we're looking at a potential high of day for either an open low high close profile or an open high low close profile, then we have a premium inefficiency inside of the range. If not in discount, if the market will trade back to 50% and fail, the discount rate that I would use, right, to, you know, maybe find a take profit inside of the range would be 75% to the low of the daily suspension block. Okay, I would want to basically see price coming back and filling this volume imbalance. Okay, and whatever from there, then we'll likely go into next week, because because Friday is a bank holiday, right? It's going to be Juneteenth. Okay, so I think everything's covered. So good luck and good trading tomorrow.